Hi everyone. So just give us some time, like in a minute we'll be starting the session. Some waiting for some participants to still join in. So once again, a good morning to each and every one of you. So I welcome you all to today's session of Pre-Bell with William O'Neill India, date September 28, 2022. So before we go ahead, would like to give a small disclaimer that any security, any stock that we'll be discussing today should not be considered as a buy or set recommendation and should be just taken for educational purpose. So without taking up much time, I'll start with Nifty 50's chart analysis for the day. So as we were discussing about yesterday as well, so your distribution days did came into a cluster and it increased beyond six. And around this day was the time when we shifted the market to a downtrend. So yesterday as well, if we talk about it, Nifty kind of opened near the previous day's lows and near the 200 DMA during the day. It was highly volatile. It breached this black line, which was the 200 DMA as well, and kind of hovered around that 200 DMA. You can see, right? So it hovered around that levels for the entire day, remained highly volatile, and at the end of the day it managed to give a close above the 200 DMA and above the 17,000 level. But what is stark is that in the last three sessions post the announcement at the Fed meet that the rate hike can be rapid going forward as well, and the median rates can anywhere touch between 4% 4.5% to 4.75% by the end of 2023, makes markets jittery, as if the risk-free rate interest increases across the globe, that hurts equities across the globe. And similar kind of notion can be expected with the RBI as well, where even RBI can increase interest rates in the next meeting to the tune of 35 to 50 bips. So if you look at the selling volumes in the last three sessions where markets have been falling, uh, more than your 17,800 levels to near your 17,000 levels. The volume was huge, especially on the day that we downgraded the market. It was near the 500 million mark. So overall, times looks jittery at the moment, and Nifty is still yet to establish a potential bottom. We don't know where the bottom would be, around the 17,000 levels or maybe lower, and Nifty probably needs to hold that bottom according to the O'Neill methodology for at least for 3 days consecutively, and post that we can shift the market to an RA. So your RA is your rally attempt that we always talk about, that the market is trying to establish a potential bottom, and when the RA happens and then the FTD happens, that is the follow through day, that is an up move of 1.5% or higher, that is when we take the markets to confirm the uptrend. And even last time when you saw, we need to follow rules and need to follow methodology, because at the end, this is what happened, right? So we need to again wait for the market to probably establish a potential bottom, and then the follow through day to happen to again uh, take the markets to a confirmed uptrend. Till that point of time, we do see weakness, and what probably SGX Nifty is, we'll be discussing that in the latter half of the PPT as well. It's a huge gap down. So talking about the key news again, what was I was talking about the selling pressure in Nifty. So FI sold Indian equities worth around 2,824 crores, but DI bought equities worth rupees 3,505 crores. On the company side, Gujarat Alkali Commission, hydrazine hydrate project in Dahej, NHPC is under construction. Subansiri lower HE project, that's a 2000 watt megawatt, sees partial flooding. But the good part is that no significant impact is anticipated in the project commissioning schedule due to the incident. And BHEL wins an order to set up NTPCs to 2 into 660 megawatt thermal power project. Companies to set up EPC on an EPC basis. EPC is engineering, procurement, and construction basis. So M&M sales a 2.1% stake in Mahindra CIE Automotive, one of the subsidiary at rupees 285 per share, and it reduces shareholding from 11.43% to 9.25%. Talking about the global market update, the US markets remained highly volatile and jittery through last night. If we talk about the opening was in a positive zone, and post that it became highly volatile and went and created new lows as well. But post that it kind of recovered, but still both Dow Jones and the S&P 500 closed lower, and the Nasdaq closed higher by 0.3%. If talk about the Asian markets is terribly bleeding. Talking about Shanghai Composite is 0.8% lower. The other two, the Nikkei and Kospi is around 2.3 and 2.7% lower. Talking about Brent crude oil is somewhere the near yesterday's level at around 83.6. The 10-year treasury yield is reaching higher and almost reached 4%, and the 2-year is at 4.29%. USD has depreciated further and made new lows of 81.8. So what we were talking about earlier, that is SGX Nifty is indicating a negative opening. You can see at these levels, if these comes true, anywhere somewhere near these, then the 200 DMA does get breached. So let's see what the close becomes for the day and how volatility strikes during the day, and whether Nifty is able to probably reclaim that 200 DMA during the day, or it still manages to close below the 200 DMA. So according to the ONeil methodology that we were talking about, you can see the stark difference in the markets in downtrend in the last 4 weeks for the developed markets. 4 weeks back, like if you look at it, only three markets were in downtrend. In the next week, you can see seven markets in downtrend, and just in a week's time, you can see how the sentiments and how the technicals change within a week. So from seven markets to 22 markets went in downtrend, and now the entire coverage of 24 markets for the developed market equity is in downtrend, which is not a good sign at the moment. So major developed market indices are running through a negative sentiment at the moment, and not even established not even tried establishing a potential bottom even at this time. So talking about emerging market indices, the emerging market indices are still faring a little better. 4 weeks back it was around 5. Now 3 weeks back it was 3, and then suddenly 2, 11, and 13. Probably the reaction would come to emerging markets a little later. As you can see, only two markets are in confirmed uptrend. There can be one two market, which probably is not following the global trend. But as you can see, not just these 13, but even the seven markets that are in uptrend under pressure, any increase in distribution days across these markets can take them to a downtrend going forward. So overall, if you talk about global equities do look bleak at the moment, and let's see across the macro front and on the market front as well, what the future holds for us in the coming few sessions. So thank you, and stay tuned to us, and do connect with us on the pre-bell and the after hours session daily. And thank you once again for joining with us.